Welcome, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper. For those of you not familiar with the show, my guests and I will cover every angle of real estate under the sun, from interest rates to the economy to what's happening in Washington. Anything that affects our real estate markets locally will be covered here. If you got credit issues, you can call me. If you're looking to buy or sell a home, you can call me. If you want to refinance to the lowest rates in U.S. history, call me. You've got questions and I've got the answers. Make sure you join us every Monday at WNEW 1580 AM from 2 to 3 in the afternoon. If you have any questions at all, the off-air phone number to reach out to us is 877-245-2030. That's 877-245-2030, or you can go to our website, which is realestate360live.com. That's realestate360live.com. You can click on the Ask a Question button on the right-hand side if you have any questions, and I'll be glad to email you back. We're waiting for you guys to reach out, and just, at any time, feel free to do so. Remember, if it's real estate, it's covered here. So we've got a lot of great stuff lined up today. A lot of stuff's been going on in the markets. And joining me on our panel to discuss these issues is Louis Cammarosano, who is the general manager of HomeGain. Louis is often cited in the media as an industry expert in the Wall Street Journal, Forbes, CNN Money, Fox Business, Smart Money, MSN, and numerous others. We're going to discuss with you about what happened in the markets last week, as well as what's on deck this week that can affect you and your real estate decisions. Louis, are you there?
I'm here, Ryan. How are you today?
I'm doing well. How about yourself?
Very good, thank you.
So we got a lot of stuff going on this week. A majority of the banks are going to be reporting their first quarter earnings. Also, we had word that Spanish bonds have been rising. The 10-year bond broke the 6% marker, which is basically the highest point that it's been in some time, and it's really undermining the investor confidence that's out there. And this is one of the big reasons you and I have been discussing. There's been a flight to safety. A majority of people are pulling their money out of risky investments and actually storing them back in the U.S. Treasuries and mortgage-backed securities in the U.S. So we've seen basically now interest rates have been retracting for the last 3 weeks. We got that huge spike up. Now, for the last 3 weeks, they have came back down.
Right. Put aside the irony that the U.S. Treasuries are safe, but that is what happens. So, that does have the impact of lowering interest rates.
Yeah. And it seems like it's almost like the seesaw thing where we've been going back and forth now, Louis. Don't you agree? I mean, it's like, you get what you think is some sort of good news, and then all of a sudden it's like, okay, still issues in Europe. And I agree with you. I mean, I don't necessarily think that it's safe to be investing in these treasuries or bonds here in the United States, but I guess they feel it's the less risky investment at this point. I think that it'll be interesting to see where all these bank earnings fall into line this week. I did note that Bank of America actually is scheduled to bulk sell. And this is, I just got this news. Let me pull it up to make sure I report this properly. For the second time in 5 months, Bank of America is tapping into their market of foreclosed homes, and they're seeking bids on a bulk offering of several hundred single-family homes. The bulk deal includes up to 500 largely vacant single-family homes in foreclosed homes in California, Florida, Arizona, Texas, Pennsylvania, and Georgia, in what is considered one of the biggest block offerings of foreclosed homes ever done by a bank. Now, I find this kind of interesting because, to this point, they've said that, a lot of these homes have been sitting, out there, this shadow inventory. If you remember me discussing, Louis, a couple of shows ago, how a lot of these banks were selling bulk notes. Well, now that it seems like a lot of this lawsuit's been cleared out of the way, and they've kind of said, hey, this is going to be their parameters for foreclosing on homes. Now it looks like a lot of these banks are just starting to just bulk auction them off.
Makes sense. They have a huge problem. They need a huge solution. It's just odd that 4 or 5 years later, they're finally getting around to getting rid of these assets. But that should have somewhat of an impact, depending on where they do it, on housing prices, and probably temporarily at least lower prices if those homes come off the market.
Well, I think that, I don't necessarily think that it's going to lower prices, to be honest, because, most of who they would be selling these bulk REOs are to investors, right? So,
well, that's true, but Ryan, aren't they going to sell them at a price which is going to actually reflect a haircut, which will be considered the market, meaning they buy them at, let's say, 30% off of fair market value. that becomes the price in your area. That becomes your comp.
Yeah, well,
now it does, though, because it takes them off the market, makes the housing supply go down, which means that the houses that are still available for sale may go up if those homes are being sold to investors who are going to rent them.
Yeah, well, see, I don't actually think that they'll.
Is that how you were thinking of it?
Well, I was actually thinking of it like this, because let's say that they sold 500 homes to just one investor, right? I think that those homes, since they're sold as a bulk REO, they're not physically going to be listed on an MLS system or a multiple listing system, right? So they won't necessarily go as a settled comp at that price.
That's correct.
Right? So what will ultimately happen, they won't really get listed on MLS until the investor then turns around and resells it to somebody else. So what I think that most of the investors are doing, if most of them are smart, they're going in and rehabilitating the properties and bringing them up so they can sell it for the max retail value.
Well, don't you think, though, that the price of those homes will eventually be public knowledge when the public company, the bank, has to report the sale?
Yeah, I do.
They're not going to be included in your comp, meaning in the the traditional way that a realtor does a CMA, but people will know what the homes were sold for on average.
Sure, and I think that the what's going to happen when they go to the investor that buys it from the bank, when they actually go to resell it, the issue that you always run into is, okay, well, this new buyer is now trying to obtain a loan, and it is public record of what that investor bought it for. So, if all of a sudden 2 months later, he's trying to turn around and sell it for $100,000 more, that's going to be an issue with the lender, unless they can show where they've made substantial improvements, or they can justify it by showing that it's an REO. So you will see a lot of that. I've been hearing a lot out there that actually these REOs, when they bulk sell them, they're not selling them at like 30 cents. They've been selling them more at towards like 70 or 75%. So if that's the case, because it's an aggressive market to actually obtain an REO versus having to, sit around and wait for you to have like the non-performing note, which could take a couple years before you can actually foreclose. So they're getting more aggressive prices. And I think that that's the other reason why the banks would just rather, hey, if we can get, 70, 75% for this REO, it makes more sense to do that.
Oh, it does. And, it also makes for a more normal market, because it's not normal to have homes that are sitting in a state of foreclosure but nothing is happening.
Right.
The market is dead, but at least now if these get sold, they're off the market, and then they re-enter the market in a natural way, either as rentals or fixed up and sold as a normal home. But just to have 20, 30, 40, 50% of a neighborhood sitting in potential uncertain foreclosure status, that's horrific for a market, because there's no real certainty as to where the price should be.
Absolutely. And, and it's kind of hard for us to get a true sense of where the market is. I mean, inventory-wise, in the D.C. metro area, we have a very low supply of homes. And, I think it's interesting because a lot of the statistics might say, hey, there's not as many pending sales in certain counties this year compared to last year. But then on the flip side of that, I'm looking at it where I don't see as many homes on the market. So, there's not as much stuff for people to go after. Obviously, the amount of pending sales are not going to be as high. So,
in the D.C. metro area is an entirely different scenario than areas where you have large percentages of foreclosures that are not being foreclosed upon. I mean, homes that are in the position to be foreclosed on that aren't being foreclosed on. And there's homes and there's areas where you not only have the potential foreclosure, but those homes are sitting next to ones that are in foreclosure. You don't have that in the D.C. metro area.
Yeah. And I mean, we have, very few of those that are actually out there. I mean, and actually the ones that are the foreclosures that I've seen on the market that the banks put on, the pricing is not that great, or they're homes that need, a ton of work. They're not going to be like a lot of the Fannie Mae foreclosures. They'll go in, they'll repaint, they'll put new carpet, and they'll be able to resell it back as more of a retail value. You might get a slight discount, but it's not like a drastic differential versus some of these areas like Florida and Nevada and Arizona. Yeah, they're having to sell these things at deep discounts. But it just makes sense for them to go ahead and offload these to another investor, because this investor is going to want to have a vested interest in either taking the property back and renting it out, or physically, going in, rehabilitating it and selling it
at a higher price. Sure. Now, what you're talking about in the D.C. metro area is the more normal situation that we had before the housing bubble. There's always a few homes in an area for whatever reason that are in disrepair or eligible for foreclosure.
Yep.
But that's kind of where the D.C. metro area sounds like they are now, kind of in a normal market. But in these other areas where you have 20, 30, 50% of the homes in that sorry state, that's not a normal market. And I think a program like this, if it works, will kind of speed up the process of making a normal market, because waiting to go one by one and the banks being reluctant to do foreclosures is just going to spread this misery out for a few more years. This seems like it has the potential to kind of speed up the normalization of the market.
I totally agree. You're listening to Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. Louis, I also think that, it would be a good thing for the markets to hear, for multiple banks to say, hey, look, we're getting ready to offload, 500 homes here, 500 homes here. So, these people stop thinking that, hey, there's so much of the shadow inventory that they're just going to continue to sit on for all these years. Just get rid of it.
It gives clarity to the market if they actually go ahead and do this, and the numbers that you're talking about.
Yeah, and I think not only that, what will start to happen is that, there's a lot of buyers out there right now, and I'm sure you've heard this, that are all looking for these steals, right? They're waiting for foreclosures to come to the market, and they never do. Or when they do, you're a first-time home buyer, you get into a contract against an investor. Now, this isn't always the case, because some banks have rules as to like the first 15 days, it has to be a buyer that's going to live in the property as a primary residence, and then after 15 days, it can be bought by an investor. But in a lot of cases, it's just if one offer is a cash deal and one offer is a finance deal, which most first-time home buyers are financing their first property, they're going to lose out, because they're going to take that investor sale that can close in 5 to 7 days. So, there's a lot of that goes on. And I see a lot of buyers miss out on, potential deals just because they think that they're going to keep waiting for this great foreclosure deal that the media has sensationalized to act like there's so many out there. Now, obviously I'm talking more from a local perspective than DC metro area.
But think this through, Ryan, because if this is successful and the banks get these off their balance sheets and somehow manage to remain solvent, that gives the Fed the ability to say, look, we don't have to support the housing market anymore and rates will go up.
Yep. Yeah.
So, right now we've been saying rates have to go up, that you're not going to be able to take advantage of these low rates forever. But something like this, you never know what the catalyst is for rates going up, other than currently they're being artificially held down. And if the banks are in a situation where they've gotten rid of the inventory that they have on their balance sheets, and they can somehow manage to weather a higher interest rate, there's got to be at some point the Fed's going to look for some reason, either improved employment market or something, or just rising inflation, where they're going to have to raise interest rates. Yeah,
I agree, and that would be something good. I mean, I see all the time. I mean, I know that in the DC metro area, I mean, it's very, very, very competitive, and when I'm seeing homes priced between that $200,000 and $350,000 marker, they're flying off the shelves like hotcakes. And not only that, they're selling for above list price, which means that there's a lot of similar buyers out there in the market, meaning that there's a lot of people that are buying between 200 and 400, and then there are the supply of homes out there.
Well, that's a good price.
Yeah,
that's a reasonable price. Where even if your home value went down, it wouldn't go down that much, you'd imagine, and it would still be cheaper to buy than rent.
Yeah, and there's
with a mortgage, that's at the current 3 and 4% rate that you can lock in for 30%.
Yeah, absolutely. And I mean, it's kind of the thing that I always have a discussion with buyers, for first-time home buyers in particular, that, between, I don't care if prices rise just a little bit. If they go up, 10%, the financing, locking in yourself to a 30-year fixed mortgage at sub 4% rates, obviously depending upon your qualifications.
Historic lows that are not going to last.
Exactly. And we talk about this week after week, that there's so much more potential for them to rise and rise quickly. Now, granted, I've been saying that for a while. We've had the ebbs and flows of what's going on Europe, and money's coming out of stocks, going back into US Treasuries and mortgage-backed securities. But at some point, that will change. We're coming up on a break. We're going to get back. We're going to jump into retail sales, which were up 0.8% last month, and what that means to mortgage interest rates when we come back.